Johan, welcome to the show.
Thanks for having me.
So you're known to be a serial entrepreneur turned VC, a very successful one. Where did you grow up and what were you like as a kid?
I grew up in the south of Holland, in a small town called Drunen, near Den Bosch. I had a pretty turbulent youth also from that end. So did a lot, experiment a lot, was thrown out of school a few times also. So really...
That's when you know you're going to be successful.
Some kind of leftovers of cookies.
Yeah.
Stroopwafels, as we name them in Dutch. Right?
Stroopwafels, yeah.
Yeah, you probably know it, right? And there were small bags with the leftovers, and I loved that, to eat that.
Yeah.
And then at a certain point, I think I was 12, 13, I realized, I can make some money with it. When I made a start to become a full-time entrepreneur, I remember that my mother asked me, why are you doing that? Why don't you take the security of a well-paid job at just a normal company? Why do you go for that risky route?
You bought this radio station that was going bankrupt.
Yeah.
How did you turn it around?
We grew the revenue in 5-fold in 2.5 years. How we grew it 5 times is just being an entrepreneur and just being on the business, right? We completely, let's say, changed the sales team and the sales approach also at that end. It was very, let's say, from a sales perspective, pretty laid back at that moment. So clients were calling us and we were not calling clients.
Yeah.
So we changed that approach, we changed the pricing, we changed the pricing structure, made a very, let's say, active sales approach.
So you went from being reactive to proactive, which basically changed the whole business.
Yeah, and also listen a little bit to what's happening in the market and change that approach also, not slightly, but pretty big, and it really helped us. Yeah.
What's up, folks? Welcome to Unravel with Manoj Aditya. Today's guest is Johan van Mil, one of the most popular and important venture capitalists from the Netherlands, and is also making strides in the European venture capital market. Everyone knows about his venture capital investments, his successful track record with his exits. But today we are very excited to learn more about his personal journey as an entrepreneur before he got to becoming a VC. I'm very excited to learn more about his story. So let's get started. Johan, welcome to the show.
Thanks for having me.
How does it feel?
Great to be here in a professional studio like this in the middle of Amsterdam. So it's good.
That's nice. So you're known to be a serial entrepreneur turned VC, a very successful one. But we're going to keep your VC story a bit on the side, and we're going to focus more on your entrepreneurial journey. So where did you grow up, and what were you like as a kid?
I grew up in the south of Holland, in a small town called Drunen, near Den Bosch. I think you were at the Jazz Center now, I recall, right? So we were pretty near those days. And so really in the south of Holland. And 4 kids at home. I was the youngest. I think also the bravest. Nice. So as a kid, I was having a lot of energy also and a lot of drive. And for me, it was always hard to concentrate. And I had a situation that my mother got a serious accident when I was 12. So I was, I think, more or less raised with my father. My mother was there, but she was ill. And at a certain time, they divorced. So I had a pretty turbulent youth also from that end. So did a lot, experiment a lot, was thrown out of school a few times also. So really...
That's when you know you're going to be successful.
Indeed.
Great. So when did your first entrepreneurial spark start? Or where did it start?
It started already at school. Because my... in the south of Holland, it's very common that people go to the market on Friday or Thursday, right? And Friday, fish day with Catholic people. So also my parents did that. So my parents always went to the market. And then they bought there some kind of leftovers of cookies. Stroopwafels, as we name them in Dutch. Right?
Stroopwafels,
Yeah, you probably know it, right? And there were small bags with the leftovers. And I loved that, to eat that.
Yeah.
And then at a certain point, I think I was 12, 13, I realized, I can make some money with it. So the first days I went to the market really early before the school started, bought a few bags, 35 guilder cents at that time. Sorry, 15 guilder cents. And I sold them for 35 cents. I still recall it.
Wow.
And then at a certain point, I learned that as the time progresses over the day, I could charge more prices. Higher prices. So that's the insight that I found out pretty soon. So at that time, I bought already a few boxes. And at a certain point, my father was driving in his, let's say, station car Volvo with huge boxes filled with stroopwafel to the
How
school.
did the price change from the day? You said
because at the beginning, everybody was willing to pay indeed the 35 cents, right? But at the end of the day, at Friday, they would be able to to pay 1 guilder at that time.
Wow! So the timing of the day was.
The timing of the day was really.
How did you find out this information?
Yeah, I think very practical. I think I just sold it, and I think I realized at a certain point, if I have more volume and also can spread it out more over the day, right? It generates a higher revenue and especially a higher profit.
Yeah. That's good. So what was your next venture after selling stroopwafels?
Yeah, it's a good question. What did I do after? I always did a lot of things, right? Because I always, let's say, the entrepreneurial blood was always flowing in my veins, right? So also always looking for opportunities. I started when I was studying a pretty successful business at that time, renting houses and renting rooms.
Oh,
it was acquired by also another company, so I more or less paid my study for it because I fully financed my study myself.
Wow, congratulations!
So that helped me. And also when I was studying in Antwerp, I also launched a kind of internet cafe, which was helping universities at that time to give students also teaching on computers, etc. So I had my own locations, etc. Also, I think with 5 locations. So always, building businesses from.
Wait, you started a real business how old were you when you started the previous business?
I was studying in Antwerp, I think 1920 probably, something like that.
Yeah. Okay. And the internet business?
I'm sorry?
The internet business, the internet cafe business?
Yeah, that's what I started then. And indeed the rental business was, I think, when I was 18 really.
Oh,
right?
wow.
Yeah. So
you sold the rental business as well?
Yeah, I sold the rental business as well, yeah.
When you were 18?
Yeah, when I was 18. And it wasn't a huge chunk of money, but enough to pay for my study. Because I needed money to pay for my study. And I was, let's say, the typical student, which I wasn't always attending classes. I liked, let's say, the social life more than the studying life. But I had to finance that also. So.
Oh, wow. That's great. What did you guys do after? Like, what was your next venture? How did you battle out of it, and what did you try to start?
Yeah, I focused then on finishing my study because it was also time to do it.
Good.
And doing some work on that, and then I started just working, right, just a regular job, just out of college, right, to do a few jobs, and learned especially then, because I think it gives you a big insight, right, especially in how professionally run to run your organization, but also to professionally build up yourself, right? Because I've been studying for a long time, and indeed learned a lot, but also spent a lot of social time. And I really had to change gears from, sitting at a bar and being at an office at 8:30 and having the first meetings. I still recall my first job that my boss, my former boss, Barbara, was really shocked that I couldn't come in time. It was for me impossible to arrive there at 8:30 every day. So, but I brought in, let's say, a lot of revenue, which helped me to succeed on that end, but not on the time management level.
Wow. So what was your first job?
I started in a sales role at a company called Telemedia, which was it was a more or less a joint venture between Telia, a Swedish company, and KPN. Making the phone books at that time, and also building a register where you can find both individuals but also companies online, right? So it was also a pretty early internet company.
So how long were you in the job market before you started your next venture?
I was roughly 5 years in the job market. And the reason also why I always felt, also when I was working there, because that company grew really fast, and I started as a telesales guy, and then I became a field sales guy, and I became an account manager, and then I became a team lead, and all within 2 or 3 years, right? And I pretty soon realized that, let's say, that entrepreneurial spirit that I have, and the thinking especially, not thinking as an employee, but thinking as an employer and as an entrepreneur, really helped me to succeed also really early on. So that's why I think I made such a fast career also in that company, and also afterwards, because you do more than other people are doing. And especially you think different. You think from, not in my role only as a revenue, from a revenue standpoint, but also as a profit standpoint, right? So also making, let's say, the right deals, etc.
Right.
Yeah.
So you say that your entrepreneurial background really helped you excel in your job.
Yeah, and especially that entrepreneurial mindset. And my father was also a not successful entrepreneur. And also there's a lot of, let's say, if I look to my ancestors, they're all, let's say, all have an entrepreneurial thing in their mind. And I think it's really, it helped me indeed to bring that forward and to do a lot with it always on the side, but also in my job, but especially also how you, let's say, position yourself in a company and how you work.
Right. Was your father, or let's say your family, responsible for you to becoming an entrepreneur because they were entrepreneurial?
I think it's indeed it's in my veins, right?
Yeah.
It's in the not in the way that I was raised, but especially everybody was there as an entrepreneur. So I think I saw a lot of examples, but not the way how I was raised. No, I don't think. I remember that I wrote a book about entrepreneurship in 2005, and in the first page I also write that when I made a start to become a full-time entrepreneur, I remember that my mother asked me, "Why are you doing that? Why don't you take the security of a well-paid job at just a normal company? Why do you go for that risky route?"
Right. I think it's the same thing for me as well. Even I think my mom and dad told me the same thing.
Yeah.
Why do you want to go start your own company at 19? Why don't you just get a job, finish school, and then just be normal? Don't do this. It's very risky.
And do your parents have an entrepreneurial background?
No.
Yeah, but in this case, my parents had, right? So
Okay.
that was the typical thing that they tried to position me to a more corporate role,
Because they know the pain and they know the problem. So
I think it was. Yeah, I think that was mainly the reason. And still, my mother passed away last year. But still, last year's also, she never understood what I was doing, and also with the companies that I had and investments, she never understood, but also realized what I was doing. And so a lot of time I said, "How is your job doing?" "I have a great job. I love to go to my work."
Just keep it simple so they don't understand.
Just keep it simple, right?
Yeah, exactly. And after you finished your 5 years of being in the job market, what was the next venture?
Yeah, the first venture I launched, which I was a very small shareholder, was BNR News Radio. We had the opportunity to buy a radio station.
You buy a radio station?
Yeah, we bought a radio station together with. I was running a company together with a friend of mine, and he, by the way, had the majority of the shares. He was a small owner there, and we had the opportunity to buy a radio station just before it went bankrupt.
Yeah,
and we sold it to Financiële Dagblad, to het FD. And it's now, let's say, a very, of course, famous radio station still in the Netherlands market, a news radio station.
What is it called?
BNR.
Oh,
BNR News Radio.
Yeah, definitely heard about them. So what were some of the early challenges you faced as an entrepreneur?
Yeah, I think the most important one is and for me, it took a while to realize that, to be honest, is focus on what you're good at.
Yeah.
Because I think as an entrepreneur, you have to do everything right. By the way, in that company in BNR News Radio, I had a commercial role. But I had a lot of companies. I'm a very passionate person. So it was a lot of focus, let's say, on commercial on that end. But if you run a radio station, also, it's a very let's say capital intensive business, right? Because you have to invest a lot in this case in journalists, into a building. I was just telling you about the newsroom, but also indeed in the quality of the radio and also in the marketing, etc. Right? So it's pretty capital intensive. And I was focusing fully, let's say, on the commercial side. So really selling radio advertising to customers. Yeah. And it was fascinating those days because radio was really, I think,
it was pretty good at those times.
Yeah, it's now what is it, 20 years ago roughly, and those days radio is very popular, right? It was also a growing market. I don't think it's growing not now anymore. I think a lot of time is shifting to. I mean, we're here podcast, right? But at those days it was a very popular medium indeed.
Yeah, I remember the only way we used to listen to music back in the day in 2000 to 2004. At least I grew up in India, so in 2000 2004 it was always radio, and then came MP3 player or cassettes, and then that changed everything completely. Yeah. So I do remember it's very popular, and my dad was always trying to tune in to make sure he gets the right channel. Channel. Yeah, exactly. So it was pretty interesting at those times.
Yeah.
So you bought this radio station that was going bankrupt. Yeah. How did you turn it around and sell it eventually?
That wasn't so hard looking it back because we had it 2.5 years, and we the revenue went. We grew the revenue in 5-fold in 2.5 years. Yeah. And the cost base was more or less the same. So we made it, let's say, from fully loss-making to very profitable. Yeah. So that was pretty easy. And especially how we grew it 5 times is just being an entrepreneur and just being on the business, right? So we had We completely, let's say, changed the sales team and the sales approach also at that end. It was very, let's say, from a sales perspective, pretty laid back at that moment. So clients were calling us and we were not calling clients.
Yeah.
And also, we were not working with, at that time, with agencies, which do the majority of their media spendings, of especially the bigger accounts.
Yeah.
So we changed that approach. We changed the pricing. We changed the pricing structure.
Yeah.
Made a very, let's say, active sales approach. We did a few marketing gigs, right? So, for example, that media planners which were not listening to our radio station, but they were listening to other radio stations. We gave them all the clocks with the timing about our news radio station, so they could see. And made a few of those gigs, right? To make our station more known by, in this case, media planners.
Right.
And we changed also the format in how much time listeners would listen, because you probably don't know, but the way that media spend for agencies is calculated is based on research data, and the research data is calculated on the time that people actually listen to the radio station. And we had a 20-minute forecast, which meant that people were listening in general for 20 minutes, because then it repeated itself more or less. But the time spent for research was on 30 minutes.
Yeah.
So every time we were too low, and that meant that also in that research we were too low in user listeners. And that meant that also we were not taken into the media plans with these media planners.
Wow.
So we changed that format slightly, and then I wouldn't say the money came in but then the revenue kept on growing, and also with that active sales approach, etc.
Nice.
So
So you went from being reactive to proactive, which basically changed the whole business.
Yeah, and also listen a little bit to what's happening in the market and change that approach also, not slightly, but pretty big, and it really helped us. Yeah.
Maybe a very naive question for me. Today we have Mixpanel, we have Google Analytics to understand how people are using your app or website or everything's going on the internet. Those times, how did you get those analytics? How did you?
It's good that you ask it. I was just playing this morning with Mixpanel for one of the companies that we invested. So I love this kind of tooling. Now, we didn't have any data at all. So it was a lot of gut feeling that you have. And it was a lot of talking to people, reading, understanding, etc. Because you didn't have any real-time or
gut
data
feeling.
insight. Yeah, gut feeling. So it's a lot of based on thinking and logical thinking.
Yeah. And that 20-minute that you identify that's the minimum listening time, that was all based on gut feeling? Or
no, that was based because it's a long story. I'll make it short. But to do that market research about radio listeners, a group of people, in this case in the Netherlands, have to fill in a diary for the whole day to which radio station they were listening. Per half hour, they have to say, I'm listening now to BNR, I'm listening now to 538, Radio 538, etc. So it was based on the half hour, right? And we had a 20 minutes program. Yeah. So after 20 minutes, people turned away and put on another radio station. So we were never recognized also on that end.
Fair.
Yeah.
So what was the program, if you can remember, that was the most popular, that kind of changed your radio station? Any specific program?
I think we had very famous presenters, right? We have, especially in the morning, if you look to, especially radio at that time, people were listening in the car in the morning to their office, and at the end of the day, home, right? And especially the morning shows were really, let's say, popular on that end. So we had a few good presenters. One guy I think is still working there, Bas van Werven. He was also on the Dutch television. Is very, I think, a car journalist also. He's really good and had a very good, I think, starting for the day of BNR always.
Nice.
Yeah.
So what was after?
But I think what the major kickoff was, of course, let's say the big disasters what happened, right? Like 9/11.
Yeah.
We had a radio station at that time. I still recall that I was walking around with clients at the studio, and there were all screens hanging. And I recall that we saw, of course, the planes flying in to the World Trade Center at that time. And indeed, of course, when Pim Fortuyn died, I think it was the same year, or 1 year later, right? These kind of happenings, right, make completely change the news consumption, right?
Yeah.
I mean, look at, for example, with Trump in the US, right? Yeah. I think a lot of media made a lot of money from Trump being president because people consume news more.
If I remember correctly, like before Trump became president, I was not really caring much about the US politics. But when Trump was
Indeed.
elected, everyone was watching it. Everyone was following it for almost 4 years. They were like, okay, what is Trump going to say today? What is Trump going to do? So definitely a lot of...
Complete comedy show, right?
Yeah, it was definitely a comedy show. Yeah. So what was the next venture after the radio station?
Yeah, then I took a few months off. I always do that. If I start a company, then I take a few months off and travel around or take my own time and then go full in again.
Yeah.
So then I took a few months off. And then I talked to a few people that I knew. In the meantime, I became a chairman of the... it's named IPAN, the Interactive Professionals Association Netherlands, like a trade society for people working in the interactive industry. It was around 2000. I became a chairman there, and that trade society, we had every month, we had a gathering, a speaker, some drinks in a fancy location in Amsterdam where I think between 200 and 400 people came.
Yeah.
So it was really the trade association. And we had some rough times there because at the time that I became a chairman and we started as a board, we concluded at the first annual meeting that the society was bankrupt because as you probably recall, the internet sector completely went down and a lot of people lost their jobs, so they couldn't pay their subscription anymore.
This was in 2000...
2002 it was, I think, 2002. And at that time, we had to, let's say, reorganize that trade society, cut costs, etc. Also learned a lot from that, especially with those group of people. By the way, the people I started Peak with, almost everybody I knew from that board. So you build a very tight connection. I think it's also interesting to share that with your listeners. But at that time, so I knew a few people also in that space. And I had some coffee with friends about a next business idea. And I always do that if I finish something, take a break, but also take some good time to learn and digest what's happening now in the market and where's an opportunity and where I feel empowered with, right? What I like and get energy from. So I had a few coffees, and I know that one of our non-executive board members, Kees Segers, who's funded, for example, nu.nl, a pretty famous Dutch news site. I had a coffee with him, and he invited me sailing in Greece or in Turkey at that time. And he had a company which is not performing well, and he said, "Do you want to take over that company and build it further?" And I did that. So that was the first company I went for. And there was a company called Sapenda, and I turned it into a Mail Media and grew it out. And then I think after 4 or 5 years, I sold it.
Right. So you've bought 2 companies that were failing, and then you eventually turn it around.
Yeah.
So what do you think is that the other founder didn't do that you were able to do?
I think one is I strongly believe that as a founder, as an entrepreneur, you should have a very clear focus. And what I see a lot, and also by myself, but also with other founders, is there's always opportunities to work on. And if you do too much, you spread too thin, and then no success will follow, right? Yeah. And if you focus, that creates success. So what I learned, especially with those 2 companies, for example, also Sapenda, which I turned into Mail Media, there was no clear focus because that company also started the software company on the business. They also had an agency company on the business, had a data company on the business, had a publishing company on the side. So they were really spreading too thin. And I bought the publishing and the data business out of it. I killed the publishing business and made it the data business. And I think that, let's say, very binary focus, that singular focus really helped to build a successful company there.
Right.
So I think that's one. I think second is dedication. I think you can only build a successful company if you really work around the clock.
Yeah.
I hardly see let's say part-time entrepreneurs. I sometimes see them, but I think it's hard to do it. So I think I
don't think part-time entrepreneurs can do it. I never recommend people. If anyone comes up to me and tells me, "Hey, I want to start a company," and they're like, I'm asking, "Okay, when are you going to quit your job?" Like, I don't think I can. But then you won't be able to do it because you have the comfort of your salary, and at the same time you're trying to build something. And anytime the company doesn't work, you're going to go back to your job and be like, "Okay, I can't deal with this." But then if you quit your job and actually go on and become an entrepreneur full time, you have no other choice. You have to make this company successful.
Indeed. Yeah.
So I always tell people, you have to choose either. You can't do both. Some people may be able to succeed with this.
Yeah, temporarily perhaps to pay the bills for a while, for a short while, but it's not long term. So I think that's the second point, right? So it really put the effort in and put the grit in.
Yeah.
And I think a third thing which also helps is I have a very very strong commercial drive, right? And that helps really in building a company, and also, you know, going after clients, making it successful, having the right talent on board, etc. Right? I think that also helps. I think the downside for me running also companies, because it can be a next question that you're going to ask, is also for me it's especially those early days, it was hard for me to delegate, right?
Yeah,
I was keeping all the control by myself, and also hard for me to find even a co-founder next to me.
Yeah.
So the majority of the companies I didn't have a co-founder, which as you probably know is now a key requirement for us as Peak to invest.
Yeah, even Peak also doesn't invest in solo founders.
We don't invest in solo founders. Also, let's say a personal learning for me, right? So I think that's also key to have. What I didn't realize at that time, and also secondly is the company that I started early, later in the career, that was different. Also didn't have a tech inside. So either we bought tech or we outsourced the tech, etc. And that's also what I really learned, that if you want to have a successful tech company, you should have your tech inside.
Right. Also, just speaking on the solo founder thing, you know, there are founders that are starting for the first time and a second time, and I always recommend them having teams, like having a technical co-founder, a commercial co-founder, because it's very important to spread it out. But then you see successful founders that have sold their company, they always go solo. What do you think about them? Like second time or third time founders have already sold their company.
I think it's different, but still, I think if you want to have, let's say, a successful company these days, and if you look at the qualities that you should have, you know, and the insights what you should have, I think it's more or less impossible to do it singular as a single founder. There are a few examples in the market, right? And people are always pointing at, but there's successful single founders.
But you can count them. It's very easy to count.
The ones which didn't succeed, right? So I think it's very rare to do it. I can understand it from that perspective, right? That you think I've already done it. But I learned, especially also now in investing in companies, but also running Peak, for example, I think the best success you can get with, let's say, a team around you, and a team of, let's say, also partners or founders, right? Which do it jointly together. Because I think everybody has his own strength. And it's also when you can align and can work on your own strength and keep the rest of your plate also, which again creates focus. So I really strongly believe in multi-founder teams.
Yeah. And also for me personally, when I started companies, and I think what I realized in the last few years is you cannot be good at everything. And you have to, as a founder, you have to recognize what you're not good at and be able to hire people that are actually better than you. Yeah. And that's very important. And that's actually been the best thing that I've learned and I've done, to hire people that are better than me, not have that ego that, okay, you are the boss, you need to know everything. That's never going to work. If you have a huge ego, it's never going to work.
And how do you assess that? That's, I think, the hardest point. How do you assess, because if you want to hire, let's say, a commercial guy and you're not commercial, and then it's hard because then every commercial guy or girl person is better than you are, right? Yeah. How do you assess that?
I don't know if this is the right approach. This is what works for me. For me, what works is I try to understand everything before I hire someone. So, for example, if it's sales, I try to learn about sales as much as I could. I end up, training. I end up reading about it. I try to figure out, okay, what's the ideal process? Okay. What do I have to look for? What is a sales process like? How do I plan my CRM? I try to get as much as possible. Yeah. And I create my own system first. And that gives me an idea to see, okay, what am I doing currently with sales and marketing? And then I go into the market and I start talking to people. And when I try to hire people, then I know what I'm doing wrong when I start talking to these people. What are they saying? Because I've tried doing sales myself and I've had customer conversations. I've had CRM setups. But knowing that you've tried it in the past and then you haven't been able to get the maximum success, or you are getting success. Yeah. But then when you talk to these experts, you will easily know because you've done it before. And when you hear them saying the right things, you're like, oh, you know what? That actually makes more sense. Yeah. And that's kind of what works for me personally. Yeah. I don't know if that's the right way.
No. I think it's a great way. And I think everybody has his own way. But I like the fact that you're talking to, first of all, that you do it yourself, right? Yeah. And then talk to peers and learn from it, right? Yeah. Because that's also what we recommend as an investor, right? That if you want to have your first key hire is talk to people you can think they're great for the job.
Yeah.
And then learn from them, and then you can assess, let's say, the other quality and ask them if they know people, right? Because that's a great reference also.
Yeah.
And then indeed you can assess the quality of other people better. But you do it yourself first, which is even, I think, a tougher way, but a better way to understand it.
Yeah, exactly. So when I moved to the Netherlands in 2017 and we joined the Rockstart AI program, so we were the program manager. She told us that we were the most youngest and the most let's say, I can't find the right word, the youngest startup, or like the one that's not mature enough to be in the program. But then for some reason they let us in.
Okay.
And by the end of the program, we were the only startup that ended up raising money and actually launching our product.
Okay.
The only reason why I was able to do that was because I spoke to everyone, every founder, and I went for feedback to everyone.
Okay.
Hey, this is our new website. What do you guys think? This is our sales pitch. What do you guys think? And I went to so many people and I got so much free advice from all of these smart people, but no one did that. Yeah. None of them around me came to me or came to another founder and asked for free advice or just, what do you guys think? It's not hard to ask. And that's kind of what I would say was my early on for success. You have smarter people in your room that have done this, that have experience, that are PhDs. And you know nothing. No, what's the worst that can happen? Just go and ask them.
Asking is, I think, the best quality what founders can have. Yeah.
Do you feel like a lot of founders don't ask for help?
I think it's more now to do it because indeed, I think, let's say 10, 20 years ago, it was also seen as a sign of weakness, right? To ask, because then you had to know everything. But I think a lot of people now realize that asking, you can never know everything. And I think there's always indeed a smarter person in the room. And it's always, I think also for entrepreneurs, it's all about learning. It's about, let's say, seeing new lights, seeing new opportunities. And it's impossible to know everything. So I think a lot of people realize it more. So I think it's more being done. And I hear a lot of pitches as an investor, right?
Yeah.
I always leave room for questions, but I hardly get good questions. So perhaps call to every listener, if you pitch for me, think about a good question at the end of the pitch, also at the beginning of the pitch, right?
Okay, good. So on the same topic, how do you approach identifying market opportunities and validating business ideas?
That's the hardest point in our job, right? I think we as Peak, just as explanation also for the listeners, we invest, of course, in seed companies, right? In the SaaS marketplace and platform space in Europe. And so we invest really early on. And I think the most important thing for us is to assess people, right? We talked in your previous adventure because I heard some good stories about you. And indeed, I heard via the AI program from Start how active you were. Yeah. So that's why I reached out to you at that time. You probably recall that.
I do.
Yeah. And so I think for us, it's key to know people, right? Yeah. And especially to learn, to get to know people, but also to assess them. And I think that's really hard, right? I had 4 founder calls for me today, and 3 were pretty clear no, and 1 I was just having a call with my colleague on that in the car was a big question mark, right? Yeah. But I think assessing founders is the most important thing that we as VC should do. Yeah. And the second most important thing is understand markets, right?
Yes.
Because we typically invest indeed in SaaS companies, platforms and marketplaces, but they're all in different sectors and different markets. So we are looking now at a company in the ocean space. Last week we were looking at a company in the carbon crediting space. We are a constantly different sector. So understanding these sectors is, I think, key. So learning the founders is key, but especially understanding the sector and then having access, I think that's key as an investor, to people in that industry. So that's why I also use LinkedIn very frequently. So that if we talk to a player in the ocean space who want to serve, let's say, local supermarkets or retailers, that I have a few friends who I can call there and ask them about their need on that product, etc. So that's how I typically do that. My colleagues take it more, let's say, from a market sizing standpoint, right? So more from a financial analytics standpoint. I work more on, I would say, combination of that, but more on the gut feeling. But they work more, let's say, on the analysis part. And I think the two ways, I think, make a good investor also. Because sometimes you don't see the number in the market sizing. Look at Airbnb. I think a lot of things have been written about that. And sometimes it's just feeling, guys, this problem is there and they should solve it. And we don't see it in the figures yet, but it's there.
Yeah, exactly. Sometimes there's no numbers, but then it's a new problem. And have you ever recognized in your VC time, like any product or any company that you believed in the founder, but you didn't really see any numbers? Have you invested in any?
Yeah. When we invested in Katawiki, for example, I think it's a good example. There were two founders. One I met before, and they were at that time a collectioner website for people who are collecting comic books. That was the business at that time. The two founders I met before, and we had a great deal in trust in these guys. The comic book segment was really way too small. The market sizing, there was no revenue opportunity, etc. But we felt these guys can fix it. So we stepped in early, and I think we pivoted. But of course we were involved in that. They pivoted the company 5 or 6 times to new business model until where it is right now, right? A leading auction website for collectibles with a curated inventory also.
Right. Have you ever made a mistake in that same thing where the numbers looked right?
Daily, really. Yeah. No, because you learn and you make the wrong bets, right? Because you and I think especially on that market opportunities, it's hard to assess markets because you're dependent also on the timing element, right, of that company. You're dependent on, let's say, competition also. So we make mistakes every day. So we said to a lot of companies no where we should have invested in, right? So that's of course.
Right. Do you remember any company? Maybe I don't know if you can mention them, but then they were on your table. You could have invested, but you didn't. But then now they're very big.
Look at Muse today. I mean, announced yesterday with
100 million.
100 million round, a second unicorn in 2024. We said no to them.
Wow. And when did they come to you?
Yeah, at that time there was, because the company was partly in Czechia, was the development unit was there, and then at that time we were pretty strict on that company should be located in the Netherlands. That was also due to the setup of the fund that we had, which was pretty logical at that time. But afterwards we found out that we could have invested in that company, so that was pretty painful for us. But also other companies. I mean, we looked at a lot of companies, which are, I think, also the Dutch companies that you probably know. We said no to them. So because also you have to be the investor also, which is there at the right time for them, but also for us, because we also, as you probably know, are looking at multiple deals at the same time. So we always prioritize the deals that we are working on. Right? I'm currently working on 2 deals, 2 investments, which is, tend to go to yes, but I cannot do 2 deals. So I also have to select between the 2, right? So it's always prioritizing. And that's really important, I think, in our case, is make the right priorities, and that's hard.
Yeah. And speaking of market opportunities, what fascinates to me, at least from a VC perspective, is: are you looking do you identify? Okay, there's an opportunity here, and then you go looking for companies, or do they, or only when they come that you?
Yeah, like, okay. we don't. So we look at a lot of companies. Of course, we get a lot of inbound, right, because of the brand peak, and we are known in Europe, and that's really helping us. But we typically look at companies, and especially spaces that we find really interesting. Yeah. And that's based on, indeed, let's say, a belief that we have and an understanding of the space. But also a lot of times is we look at a company and then we think, oh, wow, this space can be interesting. Yeah. And then the company or the founding team cannot be interesting. But then we dive further into the space. That can happen. And also we made a few investments in the sales intelligence space, right? And that's also because the space is very interesting, because sales intelligence space is a lot of based on gut feeling and not on data. So if you can use data there, then you can really accelerate commercial success there. Yeah. So that's typically a space where we said, okay, this is interesting. Let's look at companies which are active there. But primarily we are focused on business models, and then we look indeed at the founding teams, and then the markets should be big enough, and there should also be a change in the market, right? So and also an opportunity to do something. Right.
Also, now coming back to your own entrepreneurial journey, can you share any memorable failure or setbacks that you can think about, and what did you learn from that?
Yeah, I had one thing which comes to mind is hiring the wrong people. I think hired a few times.
That's
let's
a
say,
big one for me as well.
Not the best people, and then taking too much time to say goodbye to them. Happened a lot of time because I gave them a lot of opportunity also to change and to become successful, etc. And I learned that often your first assessment of that person is right, and then you should do something with it. Meaning probably that you have to end it. So I think that's one what I really learned the hard way. The second thing is that especially if you sell your company, that's the reason why, of course, I started that podcast, The Big Exit, is the time and especially how you sell is very determining for the success of the company.
Yeah.
So at one time I was having a company and was being approached by it's a funny story, by the way. I was going to Paris with my girlfriend for a weekend trip, and just a few days before, I realized that 2 of my French competitors were planning an IPO. And I didn't know that. So I said also to my wife at that time, we have to go to Paris, but might be I have a lunch and it might take some time. Well, we ended up that I was having meetings, of course, because they were going for an IPO. It was a great way for me to sell the company, right? So timing is everything. And with another company, I found out that I was approached to sell the company at that time. And but we were doing really well, growing very fast, and having a lot of access to funding, etc. So I didn't need to sell. So I said no, and I even didn't talk to, in this case, the banker which approached me. So he bought my competitor for a very good amount, and that competitor was, I think, roughly 30% doing less revenue. But for the amount they bought him for, because they were listed, I would have sold my company also. Yeah. So it's also making the completely wrong assessment at that time of that opportunity. And it was really funny because I reached out to that banker after that. I said, I still have a company. Are you still interested? No, I'm not interested. So it's also good to learn from. Yeah.
Oh, wow. And in terms of, we always meet great people along the way, and, we take advice, mentors. And what are some of the most important mentorship or networking that you've done that have really changed your life? Like sometimes someone will enter your life and they've changed it completely. Has that ever happened to you?
No, not that way. I like to work with mentors. I always have, let's say, people around me which help me and where I reflect with, etc. That can be, let's say, friends, close friends. That can also be indeed, let's say, more business mentors, but it can also be, let's say, professional coaches. I like to work in that kind of setup because to improve and to learn from myself, right? But there hasn't been a lot of, let's say, major changes on that end. I think typically what I do, because I also made the switch, let's say, from becoming an entrepreneur to become an investor, is that indeed I read a lot about it. I talk to a lot of people. I see what's happening. I build my own conviction on that, etc. So I take a lot of time, and that's the time that indeed I reach out to people, but not, let's say, massively in changing my career. I mean, I changed my career a few times, especially if you build companies like I did before, then you change constantly, right? So I think the change is a constant for me. So perhaps the change that you're searching for is already, let's say, built into me, right? So it's not,
So, You've been an entrepreneur. You've also seen way too many entrepreneurs in the last 20 years of being a VC. What are you looking for in an entrepreneur?
I think a few things. Good question, by the way, because that's a question that I ask myself a lot of times, what I'm looking for. One is, I think I want to see passion.
Yeah.
Because I think if you want to start and build and grow and exit a company, then you should convince yourself, but also your home, your wife or husband or your kids that you work every day at night, etc. So I think passion is key. Also to convince your employees, your investors, potential buyers, clients, etc. So I really want to see that passion. And that's hard, right? Because if you look at tech entrepreneurs, they're not always that passionate. But I want to see and feel that energy that pulls me through the screen to this this entrepreneur. So that's I think an important one. Secondly, what I want to see is grit. Because it's always, and I've experienced myself a few times, it takes longer, it's harder, it will cost you more money, time, energy, etc. to build a company. So I want to see proof points that that person has grit.
Yeah.
And that can be in your career, that can be in your earlier job, that can be as a founder. That doesn't have to mean that you have been successful as a founder. I think failed founders have learned more than successful founders in general. But so I think that's the second thing I want to see, is that's a grit. And thirdly, I like to see that data-driven mindset.
Yeah.
Because compared to BNR, when we didn't have any numbers and we're only listening to our gut feeling, I think this era is all about, I wouldn't say numbers, but it's all about, let's say, understanding data, growth data, user data, how you can set up campaigns in whatever, whether you are B2B or B2C or focusing on enterprise or on net retention. It's all about understanding the numbers. And I think these are the 3 typical things that I'm looking for in a founder.
Very true. And the fact about grit, you know, first-time founders, including me, when I started my last company, the fact that it takes longer, it takes more money. You know, you don't believe that when you're starting for the first time.
It's always,
and I never believed it as well. Like today, I know exactly. Whenever someone tells me, "Oh, it's going in 6 months, I'm going to be able to hit profitability," I'm like, "No, you're not." And then somebody, "Okay, in like a few weeks, we're going to get the product." I'm like, "No, you're not." You know, when founders don't believe that, how do you convince them? Like first-time founders, they have a good product, but they don't have that mindset that it's going to take much longer and you're going to take way more money.
Yeah.
Have you ever recognized and have to tell founder that it's not going to be the case?
Yeah, we always do it. I mean, we will announce next week an investment in a company in Berlin, and always if we look at, let's say, the budget, we always, let's say, roughly do it by half, and it takes twice the time that is expended, right? So I think we always make that calculation. We also discuss it always openly, but hardly a founder ever recognize and acknowledges that will happen. I think you have to be experienced on that end. And I think also as an investor, you should be, you should make that calculation, but it's a thin line, but you should also keep the founders believing in their own story and their own ambition, right?
Yeah.
So I think as an investor, you should calculate, okay, probably we will need more money and more runway, so more time and eventually runway to succeed this. But you shouldn't keep the founders from that belief. And I think at a certain moment, the reality kicks in as a founder.
Yeah.
And then you should be there. And then you can say, I've said it there before, but that doesn't bring us anywhere.
That doesn't help,
But then I think it's good because then you're on the same page, right? And then you start really, let's say, communicating on this with the same background and the same knowledge that you can. But it's always hard to acknowledge. I mean, it's the same, I was just mentioning when we started to show that I'm expanding my house. I was discussing that with my girlfriend also. I know that the budget that we set to the guy who's building a house, I know that we need twice as much time, and I know that we need twice as much money, right? That's
always the case.
But my girlfriend also says, no, we can do it within that budget.
Well, if it happens, I'm very happy. But if
I don't count on it.
Yeah, exactly. So you see a lot of opportunities to invest in, and you have a lot of founders pitching to you. Like, how do you prioritize and decide which ventures to pursue?
Yeah, good question. I think one thing is to know what you like and what you don't like. So also in our team, right, at Peak, we have 12 people, and I like a certain kind of business and a certain kind of founder. I just mentioned it, right? And we have other people in the team who like other things. So I think good to focus on that.
Your competence, basically.
Your competence, but also where you get energy from and where you believe in and not. So I think that's one. Secondly is also, I take a lot of time to prepare the meetings that I have beforehand to make my own, we have a 4T assessment of companies, right? To build my own canvas, right? To build my own conviction about a company, right? Yeah. What is it, what I like in the founders? Where's my doubt? What's on the traction side? What is I like? What's the doubt on the thesis and on the timing? The 4Ts, the framework that we are using for that. And I use always, let's say, 30, 45 minutes per company to prepare that, while the actual call is often 20 to 30 minutes, right? So I take more time to prepare it than for the actual call itself. Because in a lot of times, when my call is already scheduled for an hour, and then after 20 or 30 minutes, I will say also, I don't think it's the right fit right now. Yeah. Let's not waste each other's time, but because that saves a lot of time also for me. So I think that's a second way to do it, right? Really to prepare and to be focused. And the third way, I think what I missed a lot as entrepreneur is to be very direct also in your feedback.
Yeah.
So if you don't like it or don't see the opportunity or don't believe in it, be direct. And it can be pretty, because we are in Dutch are known to be pretty rude on that end sometimes.
I'm known to being rude as well.
Yeah, you're pretty. Yeah, you can also be pretty direct. I noticed. Yeah, but I think it really helps founders to give them direct feedback, right? And I learned, especially in my field, that focus, right? But also, let's say that focus on what I like, but especially also that direct feedback saves me a lot of time, because I don't talk to founder. I mean, if I have a first call with the founder and I like it, then I schedule the second call.
Yeah.
And also, if I don't like it, in I think in 90% of the calls, I in the call give the feedback.
Yeah.
So I don't spend time on thinking about it, sending an email or calling them, etc. Right?
Yeah.
So I think feedback on the spot is key to have a very clear focus.
Yeah, I kind of agree with that. And some people say it's extremely rude to do it, but then for me, I don't talk to startups, but I talk to when I hire people and I'm doing interviews. I usually try and tell them in the same call, "Hey, this is not going to work. I'm so sorry. I don't think we're going to give you a call." Sometimes I know in the first 5 minutes.
Indeed.
I'm wasting my time. So I try to end my call in the first 5 to 10 minutes if I know it's not going to work. And if I know the call went on for 30 minutes, I know that, okay, this call was good.
Yeah.
And a lot of times my own colleagues have told me, like, don't do that. It's not very nice. But that person's not prepared. That person didn't know what he was talking about. I don't want to waste my time. And it's good for him to know that someone will actually tell you that, hey, you know what? This is not going to work because if you're not prepared, you didn't have this information. Maybe for your next call, why don't you try to have this thing?
Yeah.
And I've been doing that ever since. And for me personally, it always works. And I think it's the best way for you to hire talent and find time as well.
Yeah, one trick what works really well for me is indeed with people applying for a job, especially also at Peak, but also at our portfolio companies, especially key positions, right? Is to ask a question what they really should know, right? So if people apply with me, I have a few questions, won't share them, but to... And if people are not prepared and not, let's say, willing to take the effort, then I'm also not willing to take the effort, right?
Yeah.
So then also can be, as you mentioned, right, end the call after 5 minutes and say, I don't see a
Have you done
here,
it?
right? Yeah, of course. Yeah.
Okay.
Yeah, because if you don't do it, then your agenda will be really full. And often what I do is I schedule a short call, let's say 15 minutes. And if it works out, then if it's interesting, then we prolong it, right?
Yeah.
But it doesn't force me also to be 30 minutes on the call, because I cannot do that, because I will end it beforehand, right? That's impossible for me.
That's good.
Yeah.
So looking back, is there anything you wish you had known first before you started out to be an entrepreneur?
No, because I wouldn't have the same path that I'm doing right now.
That's a very good answer.
Because I think as an entrepreneur, and also when I was working and as a kid and all the things that I did in my life, I'm pretty grateful that I did it. I learned a lot from it, but it also makes the person who I am today, right?
Yeah.
And I think if I would have known that indeed everything takes twice as much time and would cost twice as much money, and what the failure rate would be, etc., then I wouldn't stepped into that, let's say, that great life that I have and the great opportunities that I see. So I think I'm really grateful that I didn't do that. There's a lot of things what I think, of course, can be handy to know. But that's, I think, the great time that we live in right now is thanks to podcasts or books or blogs or whatever. You can learn a lot. There's a lot of content available right now. And especially when I started as an entrepreneur, building the first tech companies, that was impossible because there were no books, there were no podcasts. So I think you can learn a lot. And I think it's key is for founders to be close to themselves, to be close to what they like and what they don't like. And I listen a lot to my personal energy. I was discussing that with a colleague today also at the office, right? That if you feel that you're losing energy on things, then I think an alarm should go off. And of course, every day something will lose your energy, but it shouldn't be the most important thing of the day, right? I think that's the thing that I would have loved to know when I was young, because at that time I had even more energy at that time, and I was, I think, not aware about that insight that it gives me right now.
Right. That's a very good insight and a very good answer. I think I agree with that, because if I knew certain things before, I wouldn't have learned a lot of different things. And because I didn't know much and I failed, and those learnings are what I know today.
Indeed.
And how could I go back and change that? If I did that, someone would have told me, I would have probably not known the value of it. So,
and it probably you wouldn't have agreed, right? Also,
I wouldn't
Same
have agreed
budget,
as well.
right?
Yeah, exactly. Same as budget. Yeah. So, big question: why did you become a VC?
Yeah, I recall 20 years ago, roughly, so before I started Peak, and I think shortly around the time that I wrote my book, right? It was a book called, the name was Entrepreneurship, Just Do It. I realized, because I was building a few companies, and I was realizing, one, I cannot do that forever with the same energy and passion, one. And secondly, there's a moment that probably I will also have kids.
Yeah.
And I want to have, let's say, a better work and life balance on that end, because I was typically the entrepreneur who was first at the office and the last person going away, working every day and night and weekends, etc. Right? And I felt it was impossible. And at that time, I was doing my first angel investment, I recall. And I have a little booklet which every year, if I go on a holiday, I take with me, and it's really paper. Paper book, and I write my thinking on that, and also looking a little bit back on last years, and also looking a little bit ahead. Where am I standing, etc. And I have to look it up, but I think roughly 20 years ago, I was on a holiday at that time with my girlfriend in I think it was Scotland. Yeah, I was writing it down and discuss it also with her. That's a little bit of thinking that I have. I want to launch my own. I think I wrote down again. I have to look it up. I want to invest, let's say, professionally. Yeah, but I didn't know at that time how it could be there. I didn't know anything about VC at that time, because it was in Europe, it was a very small,
very new
business
concept.
Yeah, it's completely new, right? But at that time, I started thinking about that. And what I did at that time is, indeed, I wrote a book about entrepreneurship. I was teaching, which was a very, very nice period, by the way. I was teaching at a university half a day per week.
Which
I was
university?
teaching VU and the HVA. Yeah. The Applied University and also the Vrije Universiteit. And I was teaching their entrepreneurship, which was really great, because those days, as you probably, you don't know because you're too young, but 20 years ago, if I was asking my students, what do you want to do after this? And then 90% said, I want to work with either Shell or McKinsey, right? That was, right. And I think 2 or 3 people said, I want to become an entrepreneur. So I made myself a goal to change it. That's also a reason why I wrote that book, started teaching. Yeah. And then I realized, because when I wrote that book, a lot of people, because it was very practical, completely outdated, I wouldn't recommend reading it also. But it was at that time pretty, let's say, practical also in how to start and how to run your company. And that, I had a few, a lot of people coming to me and asking me if I would be an advisor or would invest in their company, etc. So I did my first bets also on that. And then I learned after that, I think that was 2 or 3 years after that holiday in Scotland, I realized, okay, I can do that. That's a nice thing, but I have to do it different. And I have to, let's say, one is I don't know everything. So I should have good partners with me, right? The learning that I already shared, a good team with it. Also, I don't have the financial means to do it fully. So also I need a little bit of more money. So if they also can bring money to the table, that can be great. But 3, I think most important one, they should be completely different than I am, right? Yeah. That I really like diverse teams and diverse in all aspects, right? Yeah. All, and then indeed, going back to that IPAN group of people, right? Then I approached a few people who were in the board with me at that time and discussed that idea openly. And then we formed indeed, let's say, a group of people which turned out to Peak, right? So I think it started really, and that was I think 6 years after it. Right. Yeah. So it took a while for me to believe and also to build that. Yeah.
Do you remember the size of your first fund and the number of LPs?
That's pretty easy. The first fund was 5 LPs, so were us as partners, because we didn't have any external money at that time, and we were investing 2.5 million euros at that time.
Okay, yeah. So that was your total fund size, 2.5.
Yeah, it was 2.5 million. Yeah, and then we did 3 investments out of that. Yeah, and then we, after 2 years, we realized this works, right? And we had 3 investments, which one was doing really well. The second one was doing so, and one was not going well. Yeah. And then we realized we have to professionalize this, right? So then we created a new fund after 2 years, and then we got some external money in, and in total fund size was at that time 6 million, to give you a little bit of idea.
Okay. Just a interesting question, just from personal curiosity. Do you remember the ROI of the first fund?
Mm-hmm.
Can you share it?
14.6%
Okay.
IRR.
And how?
So there's a yearly return.
Yeah, for how many years?
So roughly we gave ourselves, right, because we were the LPs and investors, we gave ourselves 2.5 times our money back.
Okay. That's very good.
Yeah, that's very good because as you probably know, right, the first fund are always loss-making.
Yeah.
And by the way, the 2.5 times we didn't realize after 2 years, right? I think it was five or 6 years roughly.
Usually it's like 5 to 7, sometimes 10.
Yeah, I think perhaps it's even longer. I'm realizing right now. But indeed, so it took us a while, but we felt we were on the right path, right, at that time. Yeah,
that's good.
Yeah,
and you've been in VC for 18 years, if my math is correct, and if your LinkedIn is accurate.
That's pretty accurate.
So would you start a new company today?
Always.
So if you do start one, which sector or which market opportunity would you go after?
That's a hard question. I mean,
founders, please listen.
Yeah. No, I would always. I mentioned it already. It would be close to me, right, where I get energy from, and I would always look at, let's say, the big forces which are now, let's say, in the market and which are now there, right. I think we all know generative AI, etc. But that's, for me, that's not a big force, but that's there. I think you have to just that's an opportunity. But I look at big forces. I look at issues into climate, issues into migration, issues in etc. So that's what I see as big opportunities right now. And I would like to dive into a space like that and see where the opportunity is.
Right. So how do you think VC has changed from 2020 to 2024? Because it's been a huge shift.
Yeah, massive. Yeah.
How do you look at this change?
Yeah, I think personally, I love change in general, but especially I love the change in VC.
It's a good thing for VCs.
I think it's really good because I think especially the years 2021 was completely outrageous.
Oh yeah,
and also I think if you look at the indices and at the index, the different stock indexes, it was completely different. And I think we are now, let's say, on a normal path again. And I didn't. At that time, I liked it, but I didn't like looking back 20 and 21 because especially our space, there was a lot of new money flowing in from VCs. Also a lot of founders starting the company because there was so much money, but also there was a lot of appetite to invest at that time. So there was really a completely overheated market.
Right.
And I think what you see right now, and I don't think we are there yet. I think we are, let's say, having the first signals of, I wouldn't say recovery, but let's say from a healthy business again. But still, I think a lot of business will go down.
Yeah.
And also a lot of VCs will go down. And I think it's also good to have, let's say, a cleaner field also. Because I still think there's too much money in the market, but also there are too much companies in the market. And if that's the case, then it limits economic growth, right? Because there's a lot of companies facing the point that they struggle to find the right people because a lot of companies have hired them on the paycheck still. So I think it's good to still correct that. And I think that also that this year I see some promising signals, right? Indeed, let's say the new unicorns, for example, as we just mentioned, are built right now. And that's good, right? But I still see a lot of companies facing difficulties to grow. Yeah. And also with too much burn, and they don't have, let's say, enough cash to be there forever. So I think also this year will bring, let's say, also I think a better reality to the scheme.
Yeah, I mean, I agree. There's way too many companies. At the same time, there are way too many VCs. But do you think that there are way too many VCs and some of them are very bad?
Yeah, of course. Really, of course. Yeah.
Because I feel like there's a lot of money in the market.
I mean, you can compare it. You were a founder fundraising, right? So I think you can compare the different VCs also. On
because I've been talking to a few for something else right now. Yeah. And some of them are very bad. It's like you can see it. Like,
and in what way they're bad?
Dumb money is how I would call it. Okay. Dumb money. They have no idea what they're doing. They're just talking about they've got LPs, strong LPs, and they're financial people, but clearly they don't know what they're talking about. I might sound very rude, but then I would say there's a lot of new VCs out there that don't know what they're doing.
No, and that's also with I think with a growing market like that, right? You have a lot of, as a lot of people call them, tourists, right? Who join the show and now they go away on the stage, right? They walk away because they cannot bring any return, also cannot bring any successes, etc. Therefore, I also like a lot. I mean, the philosophy that we have with Peak always is we are often the jokers make, especially with international investors. These are the Dutch guys, right? They look at the penny.
Yeah,
we are pretty, let's say, capital efficient also as Peak. So we don't tend to throw in a lot of money and see what happens. But we are pretty, let's say, capital efficient also in the way how we finance companies, right? And if the company goes well, Katawiki we were mentioning before, Trengo is another one, then really we want to go in deep, but first build that conviction and build that growth over time. And I think especially those years, 20 to 21, that mindset, I mean, we had a lot of discussions with also our founders, but also with co-investors in the market. And we said to a lot of deals, no, because of that, let's say, overheated market. And I think that's now getting less and less. Still it's out there, still it's, and I think it takes, again, this year to make this, to clean up this battle, to clean up this field, right? And I think it's also needed for founders like yourself to have, let's say, proper access to capital, because it also dilutes your attention, because you talk to a lot of, let's say, VCs and founders also from the same hand, which don't have the right skills to assess that.
Right. So we're going to go into the last question. So that's going to be the last one. So what advice would you give to aspiring entrepreneurs who are starting their journey now?
One, do start.
Yeah.
I think this is, given the changes in the market, given also the economic situation that we are right now, I think this is the best time to start a company. Yeah. I think it has been proven by successful companies that they didn't start in economic high turn, but especially in downturn. I think that's one. And secondly, there's a big shift in the market now, right? So I think it's a great moment to start a company. I think that's one. So indeed, start. Secondly, I hear a lot of entrepreneurs who want to start a company, but they don't have the right idea. Yeah. That's why I hear. My advice would be just start doing something. Just build your own MVP, keep it small. Just doing it as a side hustle first, and just see how it works, right? Especially if it's your first company. But learn what it is to build something and then, grow something and scale something, right? And probably the first idea will fail, and the second and third, whatever fail. But you will learn from it. So don't spend a lot of time thinking about it, but just do it. Yeah. I think that would be an important piece of advice for me. And third would be, don't do it alone. Do it together with somebody else. Do it perhaps with a friend. Do it with somebody who's completely different. And I think that's key. Then with different skill set than yourself. Yeah. Complementing, etc. So I think that's the third thing. Fourth thing is, as it is small, do it with your own money. Yeah. So don't start raising already or asking friends to fund it, etc. But do it with your own money, and you really can start your company very small these days.
Today's, it's so much more efficient to start a company.
So much more. I mean, I was discussing it, I think, a few weeks ago with somebody. When I started my first company, really, you had to start a BV, and you had to hire an office, and you had to hire the service, and everybody needed a lease car, etc. Yeah. So the only moment when you would launch a company, it will cost you probably 100 to 200K.
Wow.
That was really the minimum. I think the first company I started, after, let's say, when I became a full-time entrepreneur, cost me 50 or 60K at that time. That was, let's say, the minimum amount. Nowadays, you don't need that kind of money, right? Yeah. I think it's easy to start a company.
You don't need any money.
You don't need any money. So it's so easy, and that's a big opportunity. Yeah. So don't raise a lot of funding right now, but first build your own conviction, etc. And but secondly, because it's so cheap, also realize that at the same time that you're working on that idea, a lot of other people are working on that idea at also scale. So if you feel that it works, then you really have to scale fast, right? So then you need access to, indeed, the right talent, the right people, the capital, etc. Right? Then you have to scale fast. But
I mean, that's what I tell myself. Like, if I have an idea, is it a hobby or a business? Yeah. Business is when it goes from you working on something to 10, 20 people actually paying for this. And it's very important for you to actually make it a business before you go after and raise money. And it works for some businesses, but not for all. But for most businesses that are starting today in the internet space, you can wait until your first 10 customers before you even think about raising money, because you don't even know what you need until then.
Indeed. Yeah.
Yeah.
Fully agree.
Yeah, I think what I was trying to say earlier was it is important for a founder to choose the right VC. Similar to how a VC, assesses a startup, it is important for a founder to assess a VC as well, because that is something that a lot of people don't think about.
No.
They think, okay, VCs like gods, we go get money from them, but then that's not the case. You're building a relationship with them, and you're selling a part of your business to them.
Yes.
If you think about it that way, they're going to be your partners for the next 3 or 5 years. What is your perspective on that mindset? Like, should founders look at it that way?
Yeah, I think they should. And I think a lot of founders don't do it. I think a lot of people realize it right now because of the tough times that we're going through right now. So now you see, let's say, the real relationship in a VC founder relationship. You see it actually working. But I think a lot of people realize it more right now. I think it's key, because I fully agree, because there's money everywhere on the table, right? It doesn't say that everybody can get it, but there's money everywhere. I think the biggest difference is how that money will be spent and how you'll be working together, right? Because I look at it a little bit of that way. Indeed, I always say also to founders, right? Realize that you'll be working with me or with Peak or whatever, let's say the next 8 to 10 years.
Yeah.
And you'll be driving in a car and you will run out of gasoline.
Yeah.
Your tire will go broke a few times. The motor will be fixed. Do you like sitting with me in this case?
In this car.
In this car together, right? And that doesn't say that you have to become friends, right?
Yeah.
That's not what I say, because I don't believe in the friend relationship between founders and VCs, right?
I don't
It's
agree
always
with that.
hard. But especially, do you trust that person? And do you feel that you can work with him or her, right? Do you also see that journey together? And what I also say, because I always recommend founders to do reference checks, and often they ask me, "Can you introduce me?" I say, "Of course I can, but please do it yourself.
Do it yourself,
and select the ones where you think. Select the ones where we didn't raise a follow-on round, or select a company which went down, because then I think then you will get the real insights. Because if you ask me, then I always, of course, recommend. I'm a commercial guy, right? I always will recommend
the best ones.
The best ones to you, right? So I think always do your own diligence on that end. And last, I think, point on that is it's about the fund, but especially it's also about the person in the fund, right? Because I'm lousy in some things and I'm good in other things, and the same for other person. I think every company has a different need also on that end, right? I'm not a great guy in setting up your analytics and dashboarding.
Yeah.
Don't ask me to do that. I'm very transparent. We have people in our team who can help with it, but I'm not right. So also this is a very detailed thing. And thirdly, what I recommend you to do also is get to know the people also, let's say not on a professional level, but also more on a private level, right?
Yeah.
Who you're going to work with. Spend time with them. Get a good chat with them, get drunk in the bar, whatever, or take a walk, or spend time, but get to know them. Not the meaning as a friend, but it's a very, let's say, tight relationship what you have, right? And I think the better you know the person who's on the other end of the table, the better insight you will have. And last thing, which came to mind now, and I explained it yesterday, at the weekend to a founder we were talking to. They're raising a round, and the other VC is proposing a bigger check to invest in. But that's indeed a dumb VC in this case. And I think a smart VC will, let's say, triple or quadruple the amount in terms of value what they bring to the table. Yeah. Because I think smart VCs really help you in guiding you in taking better decisions, being better informed. We are not running the business. We never will do that. I think founders really should run the business, but especially in giving some benchmark, giving some guidance, sharing experience, connecting to the right people, etc. That really can bring that value to the table.
Right. Yeah. Perfect. Well, we've come to an end. So thank you so much for coming on our show.
Love to be here.
So how do you feel?
Yeah, great. Great show. Good questions, by the way. Thank you for sharing everything, and also sharing the things from yourself.
Nice. Thank you so much. So thank you everyone for tuning in to Unravel. This episode was a very interesting episode. Also, we dug a bit deeper into VC entrepreneurship and the mind behind a VC. So if you have any questions, feel free to reach out to Johan. And if you're raising money for your startup, go to Peak Capital. So a little plug there. So until then, stay curious and stay healthy, and see you in the next episode.